What credit score you really need to buy a home? One of the most common questions I hear from buyers is, what credit score do I actually need to buy a home? And most people are shocked by the answer, because what buyers think they need and what lenders actually require are very different things. My name is Bryan Marota. I'm a real estate agent here in California, and in this video, I'm going to break down what credit score you really need to buy a home, how lenders actually look at credit, and why many buyers disqualify themselves when they don't need to. The biggest credit score myth. Most buyers believe they need perfect credit, a 700 plus score, or excellent credit to qualify. That belief alone keeps thousands of buyers stuck renting every year. The truth is, you do not need perfect credit to buy a home. Minimum credit scores by loan type, general guidelines. While every situation is different, here are common ballpark ranges. FHA loans often allow scores as low as the mid-5s to low 6s, depending on down payment and overall file strength. Conventional loans typically start around the low to mid-600s. VA loans focus less on score and more on overall risk for eligible buyers. That means many buyers who think they don't qualify actually might. Why credit score is only one piece of the puzzle. Here's what buyers don't realize. Lenders don't just look at your score, they look at credit behavior. They evaluate payment history, recent late payments, collections or charge-offs, how recently negative items happened, how much credit you're using. A lower score with clean recent behavior can sometimes be stronger than a higher score with recent issues. What matters more than the exact number? Two buyers can have the same score and get very different outcomes. Why? Because lenders also look at debt to income ratio, income stability, cash reserves, type of credit accounts, recent financial changes. Credit score opens the door, but the rest of your file determines how wide that door opens. Why buyers hurt their credit. Without knowing, many buyers accidentally hurt their credit before buying. Opening new credit cards, financing cars or furniture, running up balances, missing small payments, closing old accounts. Even small changes can impact approval timing or loan terms. Should you wait to fix your credit? This is where many buyers lose time. Waiting can make sense if your score is actively being repaired, you have a clear plan, the improvement timeline is realistic. Waiting does not make sense if you're guessing instead of checking, you don't know what actually needs fixing, you're delaying without guidance. Sometimes buyers are already qualified, they just don't know it. What to do if your credit isn't where you want it? If your credit needs work, the goal isn't perfection, it's progress. Simple actions can help. Paying balances down, not off completely, avoiding new credit, cleaning up late payments over time, getting guidance before making changes. Small improvements can make a big difference. Final thought. Your credit score is important, but it is not a deal breaker for most buyers. What stops people isn't credit itself. It's misunderstanding how credit is actually evaluated. Once buyers understand the real requirements, the path forward becomes much clearer. If you're unsure where your credit stands or whether buying is realistic for you, I'm happy to help you get clarity. You can call or text me at 56248-48138 or message me on Instagram at Bryan_Marota. Even knowing where you stand can change your timeline completely.